technology within financial services is not new. We have seen the era of ATMs, the credit cards, the debit cards, the mobile apps, and financial services has always been at the leading edge of adoption of new technology as it emerges. If you think about the models that any bank, any financial services institutions have run, predict risk-weighted assets or detect fraud, interact with customers through chatbots, and basically always creating new marketing content. These are capabilities from a technology standpoint that any financial institution has been leveraging over the years. What we see now is that with the advent of agentic architectures and AI, we are able to see the reasoning models, the planning models, and as these capabilities mature, obviously there is still work to be done around the maturity of some of these technologies for mainstream use within financial services in the front office. But we are starting to already see the deployment in scenarios where if you want to do equity research or if you want to do a customer services relationship management use cases, we are starting to already see these models being deployed, the solutions being deployed. Now, if you look at a particular financial services institution that has been built over the years, there are basically two important paradigms. One is customer experience and the other is trust. All through the journey of any transformation, these are two factors that matter the most. We want to be able to make sure that we are able to express and have an expression of user interface which is simple to use, which can be deployed in the consumer world as well as in the business banking world. But the most important thing is the trust. And as we look at this technology, right, it can deliver 10x returns, and that's the shareholder value that we need to consider. And as you think about it, right, the banks which have been built over the years, or the financial institutions that have been built over the years, have lots of data silos, have complex governance structures. They are product-led, not customer-led. They are, working in a multi-jurisdictional regulatory environment. And all of these challenges pose major challenges as you think about deployment of agentic AI within the landscape. But it poses a massive opportunity. The agentic AI can provide you seamless service when agents can talk to each other. It can provide hyper-personalized services. Hyper-personalization or personalization has been talked about for years within financial services institutions. But we have done segmentation, we have done customer lifetime value, but deploying of personalized services, personalized experiences is something that this technology promises. And it's proactiveness, right? When you detect something, when you predict something, when you determine something, you're able to respond to the customer request. And I think that's one of the key factors that within our research as well, we find that customers, customer centricity is the key aspect of any future financial services institution ethos. And the second thing is the trust, right? Anything we do we need to be able to explain, not only to the regulator, but to the customer as well. We need to ensure that we take permission from the customer of what we are doing with their data and with their information. And I think that becomes challenging when you go into the agentic world as to how the permissions and the privacy is managed. And security, right? This technology can be used by bad actors. Hence, security is an important aspect as we look into it, and cyber threats is important. So what we're starting to see is personalized agents which can improve the productivity, can be deployed in an assist environment, can deliver benefits. But whilst we are leveraging AI, Gen AI, agentic AI to deliver, going through analysis and generation of lots of data, human strengths need to be embellished. How do you detect when there is bias? You need to detect when there is, how do we make sure that cognitive and motivational leadership is deployed? And that we starting to see move towards the agentic AI, which is where I can deploy specialized agents, still human in the loop. Obviously, humans need to still train and activate them. Uh, but the important thing is they're able to do specialized activities. They are able to employ reasoning and be able to improve the quality of outcome, not only at the speed at which we expect, but the quality of outcome. And as we see the future, we'll have to rethink about the business processes in financial services. Existing processes, as I said, are product centric, right? And it's important to understand how those processes are reimagined, uh, where the form factor has changed, where the input has changed. What I mean by that is you can do a lending product by taking a picture of a car, video of a car, and a picture of your identity card. That is the only three pieces of information that should be able to invoke a full lending journey. And I think that will start to see, you will start to see a lot of those journeys happen over time. As we evolve from, as Ramesh talked about, right, trillions of agents in our society, we'll go from one single agent to multi-agent to intranet of agents to internet of agents, as we saw the web evolve when Tim Berners-Lee, invented it was to share the research paper between researchers, but then over time, very quickly became the model for social and economic activities within our society. And we will see the same. The question is that how fast and how slow that will happen. It is our opinion that we are already starting to see multi-agent architectures emerge, and fundamentally the foundational enterprise architectures need to evolve to meet that. As you increase the velocity of these agents, how do you maintain them? How you support them? IT operations need to be looked at. How do you ensure that these multiple agents that are being created can be supported and can be monitored? And that's where the most important point comes, which is around the trust. The trust requires not only the observability of the telemetry of what's happening, but also the most important thing is to understand how that telemetry, what can you predict? What is the result going to be? Because the data drift and the model drifts. So what we see is that as we go through this journey of agents to internet to the agent economy, we see that we will see an evolution from thinking about agents applied to existing processes to process being reimagined, organizations being reimagined, and industry being reimagined. I'll take an example to explain this point. Let's take an onboarding process in a bank, which takes 45 days, can take a long number of interactions, a number of interactions between the customer and the bank. And it's there where a lot of information needs to be collated and consolidated to be able to invoke that process, to assess the risk, to understand the risk profile of the customer. Agentic AI can improve the efficiency of that process in point solutions, like if you want to do plausibility statement analysis for a customer. But when you start to rethink the whole process, then you start to see the value being realized. And what we talk about here is the cost basis on which you attack start to increase. And I think we will start to see that. As you look at it, there will be a consumer pull, enterprise push for adoption of this technology. We believe that the three factors that the customers will expect this technology or these solutions to be implemented when in financial institutions will be primacy will be on trust and security. Second will be seamless, intuitive design and experience of using this technology integrated within deterministic solutions that already work within the bank, and ensuring that tangible value can be realized by the customer in terms of time, in terms of quality, in terms of management of money as they see it. And on the enterprise side, obviously they want demonstrable ROI, but security and governance is also important for them. And finally, I would say the enterprise integration, the scalability and the enterprise data forms a critical part of being able to adopt this technology. So if you look at the intersection of these two, pull and push from customer, consumer, clients towards the enterprise, you will start to see there are some common themes emerging, which is what NANDA is really looking at. What NANDA is looking at is basically establishing that open standard. The open standard where you have the persistent identity, where you can have seamless communication protocol, both semantic and syntactic, as well as the enhanced security and trust. Obviously, the value exchange that needs to happen will have to adopt the current practices and the current frameworks within the economies. And that will be different from sovereign countries, one country to another country. But what is important to see here is that we need to create an agent identity, and that agent identity and the protocol that you establish, which takes a, a number of years, because the customers will have to trust that these technologies can be safely deployed before they give their credit card to these agents to act on their behalf. And hence, it's important that we think about how to deploy this safely within the society and make sure that we deploy that. And from that standpoint, I strongly believe that initiative like NANDA, Project NANDA, is at the heart of some of these evolutions, and the thinking that Ramesh and his team are doing are critical and significant to achieve those three paradigms, which is establishing an identity, establishing a trusted exchange of information, and ensuring that there is a common protocol so that you can quickly scale this technology. In my discussions with Ramesh, we have discussed about how to establish this within the financial services institution. So we are proposing that we'll establish a working group in collaboration and led by MIT Media Lab to help us bring some of these with the financial services and what financial services needs to do to adopt this technology. Financial services is not only the adopter of this technology, also needs to manage the risk. Imagine a city or a region that is very heavily call center centric, and that call center area comes under attack, and those jobs have to be remodeled. There is an impact to that economy, and how does that risk is factored into the thinking where the banks lend to the people in that society, in that community, house lending, or other commercial lending establishments need to be considered. So it's both impacted by this agentic economy, but also is a tool for creating efficiency and creating new economic value within our society. Ramesh, I'll pause there if there are any questions.
This is fantastic, Peeyush, and we are very excited about working together on the future of agent economy. If I can just ask a couple of quick questions on that. One is, and I encourage others online to post their questions in the chat as well. What do you see different between, say, called AI for finance or financial world versus AI agents for financial world? I know you talked about more of the consumer push and the enterprise pull. How would you see it differently when consumers have their own AI agents?
Yeah, very good question, right? So this is where I think if you think about it, like Apple and Google will try to build consumer-led AI solutions. At this point of time, most of the large language models are trained on the data that is available in the open web. It's not, Ramesh, trained to your data within Gmail, your Facebook, your LinkedIn, and your preferences in your tools because of privacy, because of data is not visible in the World Wide Web. What I see is that the consumer agents which are my agent or your agent, will interact with these vertical agents in an ecosystem play to deliver that value. And that vertical agents need to be driven by the enterprise, whereas my preferences will be known to my consumer agent. That would be that's what I observe with what what Google is trying to do with the consumerization of this agentic AI, whereas enterprises will have to think about how to create some of their services. And I think that's the difference I would see over time.
That's fascinating. So I think you're saying that financial data is a very private data, and creating an agent based on your own financial history, own financial profile, your risk profile, your regulatory profile, and so on is going to play a very important role, which very, very fascinating.
Yeah, and every regulator, every jurisdiction have very strong regulatory, controls, and I think you have to factor that into, the banks cannot leverage that without my permission, and hence there has to be, and in my opinion, you will see a lot of embedded solutions like financial services embedded in, for example, travel right now with Uber, for example. When we travel, we don't think about paying because it's embedded there. We are going to see, and this has been talked about within financial services, is how do you move towards embedded solutions, and ecosystem plays, which allows you to build that. And I think agentic AI, when you buy a home, right, you want to buy insurance and you want to buy lifetime insurance. And I think that's going to play a big role.
I was when I was growing up, I was talking to my brother who's older than me, Prakash, and he's in finance, and maybe I was like 10 or 12 years old, and I was like, why is this so complicated? It's just about money. You buy things, you sell things, and so on. And my brother said something very interesting. He said, you know what? Finance and economy is just is common sense made difficult. And I feel like in the agentic world, finally, consumers can focus on the common sense of things that matter to them, and all the complexity will become invisible. Just the same way when you use smartphones today, all the complexity of which computer to buy and how to maintain it and so on, it just kind of disappears, and consumers can interface with their data in a very common sense way.
Yeah, and also if you think about it, right, most banks are built with, there's still a lot of mainframe and a lot of COBOL and Fortran. I myself was a programmer in Fortran, writing code for a few banks in 1990, writing their pricing models. So if you think about it, right, these technologies are still prevalent, and the data is sucked into those silos, and I think they will have to be exposed. So, in my opinion, to take the full advantage, enterprise architecture of these big banks will have to be reviewed and considered as to how you manage that through that process.
Fantastic. Thank you, Peeyush. And we're looking forward to the working groups that will be focused on agentic web for the future of finance. So if you're interested, please write to me, and we'll have the working group starting very soon. Thank you again.
Thank you. Thank you very much. Thank you, Ramesh.
Excellent.